Twitter reports its quarterly earnings after the market close on Tuesday. So what can investors expect to hear from the company in this increasingly competitive social media landscape? Joining us now to talk all about it is Scott Kessler. He's the Deputy Global Director of Equity Research at S&P Global Market Intelligence. So Scott, big week for social media. Scott, let's first off talk about this buy rating you've got on Twitter stock. What aspects of the company's business are behind this kind of a bullish rating?
Well, first of all, Dominic, thanks a lot for having me. When we think about Twitter, we really think about three things. One is the fact that, notwithstanding the fact that people talk about Twitter as kind of a no-growth company, we point to expected continuing revenue and earnings growth. So I think in the quarter, we're looking for roughly 40 to 45% growth in both revenue and earnings. We're looking for around 10 cents as the earnings per share number the company will put up. I think that compares with 7 cents the company delivered in the year ago period. So this actually is a growth company in many ways. Second is the fact that, look, Twitter has made a lot of changes in terms of the management team, and we're hoping they'll provide more of a sense of what they're thinking about in terms of new products and opportunities. And then third, and this is something that really isn't talked about very much, is the fact that from a valuation perspective, Twitter is starting to look very, very appealing. It trades, I think, at about 35 times our expected earnings for 2016, and it has about $3.5 billion in cash and investments, giving them a lot of kind of options and opportunities.
All right, so what are some of the risks then that investors should be aware of? What could hinder the stock's performance going forward? You know, in the past, people have brought up this idea of growth in these monthly active users, or MAUs. So where are the risks to Twitter?
Yeah, so you highlighted the most obvious one that people have been talking about really since before Twitter came public, and that is growth in monthly active users. It's really been non-existent. We'll see to what extent they can kind of maybe show re-acceleration in that number, or if they don't, indicate why that metric isn't as important as it used to be. That, to us, is actually more important an opportunity for Twitter. And then the second thing I would point out is clearly there are concerns about Twitter in terms of other social media properties gaining traction, gaining users, gaining engagement, perhaps from Twitter. So most obviously, I think people think of Facebook, but I think more recently, a lot of younger users have been moving to Snapchat. And so we're wondering to what extent Twitter is going to be talking about that. The other thing I'd point out is, understandably, this has been a very volatile stock. I remember around Christmas 2013, only a month or two after they came public, the stock was $75 a share, and now it's around $17 a share. So downside volatility is something that people need to think about and be comfortable with, but we see upside from here in part based on nice growth opportunities coupled with an attractive valuation.
All right, Scott Kessler, it seems like it's a lot to watch here. We certainly will have a close eye on what happens with Twitter and anything that we could see coming about those growth numbers in monthly active users. Thanks so much. That's Scott Kessler over at S&P Global Market Intelligence, and thanks for watching. I'm Dominic Chu. Have a great day.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.